Alright, here we go. Please tell me I'm on. Alright, hopefully I'm live. Technology, as usual, giving us fun. This really today is the epitome of the type of day that we look for in the market as short-term traders. I'm going to go through a bunch of stuff. But basically what we saw today was not only the stuff that we covered in the morning meeting, presented a lot of opportunity. During the day, a lot of stocks triggered fresh news, stocks trending lower, stocks trending higher. You could have been in longs and shorts today making plenty of money. The market, as of right now, made a new low, and it seems like the catalyst was the BAC downgrade, that's not particularly rational. BAC should be downgraded. It's kind of a piece of garbage. But I'm long FCX, and FCX even blipped down with that. You can see that was an opportunity for people to buy in that 30-cent down move. It's ticking back up. And I tweeted about that earlier when I got involved. And it started to hold above 36.5. I'm looking for the move back up to $38 a share. So let's start with, actually just give me 1 second. Just want to make sure that we're broadcasting. And indeed we are. Okay, so taking a look at the market. The first thing I want to do is show you guys the last 2 weeks of the market and kind of how I view what's going, the price action. And we had that nice uptrend from 114 to 122. 3 of the last 4 trading days, we peaked up against that top of that range. Hard sell-off into the close yesterday. And we were using 120.50 as our first inflection point on the open today. And that was the first trade I made in the SPYs today, trading that on the short side with a tight stop of about 10 cents of risk. And that actually happened right on the open, right here. Covered into 120, and then we reshorted once we got below 119.90. It was a little bit dicey. We spiked up to about 120.20 before we started heading lower, but eventually that trade worked and came off into the 119.25 area. Looking at the action from yesterday afternoon, you can see we're in a downtrend from yesterday afternoon from 122, failure at 120.50, and the price that we were filling at in the last hour or so, or hour and a half, is 119.80. We haven't been even getting back to the 120 for a test. And I think that downtrend line is probably going to catch up to 119.80 in the next 30 or 40 minutes or so. All bets are off, obviously. Some comment comes out of the Fed, could create some wild gyrations. But right now, with the intraday downtrend we're experiencing, if we take out that 119, you could really see some nice panic, probably down to 118 or 117.5. And I would trade that momentum down move and look for some type of flush down there. Let's get into the stocks that we're looking at today. I'm going to take a look at, the stocks that I traded first. First one was Oracle. Reported after the close yesterday, moved up on that initial news release. This morning was gapping higher, but it started an intraday downtrend. And I've been talking about this a lot recently, not only for the benefit of people watching the show, but I'm kind of speaking to the people on the desk. If I hammer home these points 3, 4, 5 times, I think it gets absorbed better as a teaching point. And what we've been seeing is in the pre-market, these trends that are established, if they continue right on the open, you're getting some pretty nice moves. And that's what we were getting set up in Oracle. We were getting this pre-market, what stock, Sammy? No. This pre-market downtrend started in Oracle, and I was looking to short it if it got below 29.20, but our morning meeting finished, and it broke above the downtrend line, and by the open, it was at 29.80, so I was right back into long mode. When stocks have a catalyst like fresh news, and they go up in the after hours, and in the pre-market the next day, they're above their after hours high and their pre-market high, we trade those strictly on the long side. There's an imbalance on the supply-demand, and there's more demand for the stock, and so on the open, the 29.80 bid held, and I've been long it ever since. I did sell into this huge pop right on the open up into the 30.60, bought back 30.20, 30.15, something like that. We're actually approaching the morning high right now, and I'm in a pretty good position to take advantage of a possible breakout to $31 a share. So that behaves very well. The next stock I want to talk about is, what was the next one I want to talk about? ANR. ANR was a stock that we knew that 24 was a longer term support. Had supported there right in the pre-market. On the open, it tried to break below there and did not. I got to zoom in on the 1 minute for you to see this. So here's the pre-market. Put a low here in at 23.80. right as the market opened. It tested that, and then the first move was up. It lifted from around 24.20 and trended up very, very nicely to about 24.80. Then had one more consolidation at 24.80 and another move to 25.5. I actually did not get involved in it until here when it made a new high at 25.70 and started to hold a little bit lower. What caught my attention, and I just want to give you the bigger picture backdrop in A&R. A&R, bigger picture, big downtrend, gapping down below the low here, the recent low below 26. I was looking for it to pop up to 25.5 to 26 as a spot to put on the longer term short. You can see right now it's about 2 points lower than that. But zooming back in on today's action, I only got involved after it had made this new high here, came back down, I punched it up, and I noticed there was a spike in volume. I'm just going to zoom in to right here. There was a 25.45 seller, and in fact there was about I think it was either a 25,000 share print or a 50,000 share print. I don't remember right now. That caught my attention and got me short. My only problem was there was a 41-cent buyer, but once that 41-cent buyer dropped, I felt a little bit better about it. The big mistake that I made was I actually covered into this down move right here. Mainly I would say it was a function of that it wasn't my primary stock. I didn't trade this uptrend in the morning. I know that Mike and a bunch of other people actually held it, and it actually rewarded them with a 1.5 down move, or actually a 2-point down move. So really nice job by them. And that was just something that I got in and I caught the reversal, but I didn't stick with it. If I was on the desk, I suppose I know some people got in here when the 25 was holding the offer. This is the easier money. Has the down move, shows you the weakness, fails here, comes back down, lower high, and then consolidates against the whole number. That's a real simple trade. You know, with a stop above this spike high of 10 cents, you're risking 11 cents here. I know people on the desk made that trade, and they made about $1.20, $1.30 so far. And that's why I'm talking about it being such a good day. Oracle shows strength in the morning, continues to trend higher. A&R trended very cleanly. What's my other stock? I already mentioned SPYs, which traded very cleanly off of and you can see, we just talked about the BS nonsense of the market coming off on the BAC downgrade, making a new low, and now people are going to be caught. That's what's really good about this up move. People are now caught hitting this new low on volume. Just ridiculous that they did that, and now they're going to have to contend with this. 119.80 is going to come back into play, and probably what the market will want to do is hurt the most number of people. So they'll probably take out this 119.80, force more people to cover. Market will fail up somewhere in this area here, and then work its way back down into this range we've had for the last couple of hours. That's what the market tends to do. It tries to hurt cause the maximum amount of pain to the maximum number of people. And when the market takes out a low like this, people instinctively, like monkeys, get short, and they don't think, wait a second, give me a second here. BAC downgrade, market's going to make new lows. Hold on a second. Give that a minute. Let's see what happens there. And you can see that the market shook it off. All right, other stuff I wanted to look at. So what I want to show you right now is I'm going to show you price action to avoid, or at least price action that is not like FCX that I've been in now for a while, which has been trending rather cleanly, or A&R, which was trending cleanly. These type stocks that look like this, these are stocks that we want to get involved in. That's easier money. It's easier to manage your position, manage your risk, add to your position, trade around it. So let's look at a couple of things, price actions today, and we have to go on Baidu. It might be acting a little bit better right now, but let me just show you from this morning. Situations that I tend to avoid. Okay, so here's this morning's price action on Baidu. And I'm actually focusing on this area. Let me just zoom in on it.
Thank you, Shannon.
I don't even want to watch what it's doing now. So just drag this over here. Can't do that, can I? Maybe I have to go pre-market to do that. Alright, there we go. So the area that I'm focusing in on is this right here. From the market open to around 11 o'clock. It goes up, it goes down, it tries to go down, it spikes up. It's just this big mess. Now finally, since I actually stopped watching it when I left the desk here at around 11:30, This price action is a little bit more constructive. We have a clean uptrend has established itself. We have a clear support level at 140, 150, and we have a clear resistance area here around 142.35. Now I'm a little bit more interested. It's trending, it's consolidating at the high, I've got a nice range. Not that different than FCX. We can see had a nice downtrend this morning, moved higher, made a higher low, trending up, pulled back, it's consolidating, very nice uptrend. Same thing could be said for Netflix. Look at this, it's a big mess. You can draw a couple of lines, 133.5. You can draw your bottom line at 129.5, and it's just going up and down in this range. Now, a more experienced trader, I imagine you could say, hey, I saw 129.50 was support yesterday in the afternoon. It's not holding below there. Maybe I'm going to feed these 129.50s and give it a point of risk, which I guess you could do. And it's worked a couple times. This time here, it went up about 3 points. The next time, if you gave it a full point, you wouldn't have been stopped out here. If you had your stop below 129, you would have been stopped out. You know, maybe you can try to trade the range, but the easier money is going to be when it finally breaks out of this consolidation range. I'm not really too keen on trading it on the short side at this point. I thought the break below 150 was the last short that I felt like, okay, maybe it's still got some more downside to the low 140s. But at 130, I don't see myself trading a downside break of consolidation at this point. I'd much rather wait for it to get above this consolidation range and get above 136 and trade it for some type of bounce. Here's the move from 210 down to 130. It's an 80-point move. I talked about it in the morning meeting. A 30% retracement would take us up to 153. And the other possible bounce price that I'd look for is right here where it failed. I think this was yesterday around 143.5. And again, just looking at it, you can see it's forming a pretty nice consolidation now over the last 2 days here. Once it moves out of this consolidation, if it does that to the upside, more people will feel comfortable buying the stock and it'll get more momentum. And in fact, when it takes out this 136 line, you could have a very fast move to 140 within 30 or 40 minutes or so. And that generally is going to be the easier money for you when not the first person in or the second person in. If you're the fourth or fifth person in, there's a bunch of people behind you supporting the stock, and that trend and momentum is established, and it's much easier money. I will go to the Twitter feed to @SMB Capital, to @SSpencer SMB, and I will take a few questions, and I will also go to the radar. I haven't done this in a while, and I actually tweeted the price spike, and I'm going to talk to you guys a little bit about that from the radar. Let me just do my link up first. So what I'm doing right now is I am linking this chart to my SMB radar, and SMB radar is organizing all the stocks that we want to trade that are in play for the day, but the one that's actually time sensitive and is almost like a news feed for us is the price spike. And coincidentally, the newest version was actually just the beta was sent to me today, version 27, which is going to actually have the sound alerts, which a bunch of people have been asking for. And what it does is it has an algorithm. In addition to tracking whether or not the stuff on the list is in play, you can see we have a price spike number, and we also have an in-play rank number. You can see that HBQ is still at the top of the list. It came onto the list here when it moved from 22.20 up to 23 rather quickly. Trading very cleanly technically. The good thing about this is the fresh news is possible new CEO. It's not a takeover rumor, so this might have a little bit more legs, this move. Certainly I know we were buying into this pullback here at 24 above the new high. I would assume a bunch of people are still long it on the desk. I can actually go over to my VTF to see who is long it. Shark is long it, and that is it, surprisingly. But this basically came onto our radar, and the great thing about this is we've had these news services over the year where we get these feeds where they tell us stuff, and we found that pretty much every time the price spike beats the news person. And the great thing about the price spike is it's objective. We know if it's over a 6, it's probably the move is pretty real, and if it's in the double digits, like over a 15 to a 20, we know that we're probably looking at a multi-point move, and we'll start to use our skills in terms of identifying trading plays using the tape and technical setups. Let's take a look at some of the other ones on it today. NUVA, that's something that's just trending a little bit lower. And again, this is a real-time tool, so it's not the same as when I take a look at, if I scroll down, let's say the in play list. RRC we know is a takeover rumors they pulled out of a conference. Actually, that was the top, wasn't it? When the Chirp guy announced that there was a rumor that they pulled out of a conference. Not that they actually made an announcement. It used to be that the news was if somebody announced that they were pulling out of a conference, that was news. Now it's the rumor of the possible pulling out of a conference. And that actually signaled the intraday top in the stock right there. I guess it's the case of the last fool, the last person bought up here. And that was the key, the cue to get sold. God only knows which hedge fund fed that piece of news to the Chirp guy to the newsfeed we were listening to. Probably will never get investigated though. All right, so looking at the second thing on the in-play, NUVA, really nice downtrend. I would imagine it's on the week, on our week list. I will take a look, and I actually don't see it there. That's interesting. But NUVA is actually looking pretty good. Let me just get that back for you. There we go. So a very clean downtrend there, and looks pretty good. All right. Somebody just called out JP Morgan. So let's take a look at this. This is real time for you. JP Morgan, I guess people are shorting that on the desk. It takes out the low. Financials are weak. That's not the worst idea in the world. And then we're also looking at Wells Fargo taking a hit, obviously. Look, this has been the case. I don't even know. I can't even remember when the weakness started in the financials. They rallied up with the market from the bottom for about a year, I think. And then, so that's like 2.5 years ago. So it's like for the last year and a half, the financials have been weak. And the market, that says something actually about the underlying strength overall in the market, the fact that the financials are just really, really weak and, I don't know, 30% off their highs that was from a year and a half ago. And the market's only, what is the market? The market's about 10% off its high, maybe. And the financials are 30% off its high. So there's a lot of other things trying to support the market. I'm looking at Goldman right now, and you can see it's below that psychological 100 level. Actually, wow, pretty clean consolidation right above the level. Whoever shorted into that drop was just rewarded with a quick half-point down move, and was never out of the money. So good for you on that trade. All right, I think that I'm gonna look at a couple more things for you. I'm gonna go to the strong list, just in case we pop. Let me just check in back and see where the SPYs are right now. Ooh, well, this is not particularly good. So quadruple bottom now. Let's zoom out and check this action out. Okay, so here's our range, and if we go in the 15-minute, we can see about the speed which we're moving up and down in the range. It's a 15-minute chart. So basically, the VAC downgrade came, we hit the 129.25. We didn't quite make it back up to the top of the range, and now we're right back down here again. Generally, if you touch, by the fourth or fifth time you touch the top or bottom of a range, if you do have a break there, it's usually pretty substantial. So this is 1, 2, 3. This is our fourth touch at the bottom of the range, and we're very close to the huge 119 level. So basically what we're looking at right now is if we start to leak below the day's low and we get below 119, I would look for some acceleration to the downside. But that's it. That's a distinct possibility. The fact that we're down here 4 times doesn't bode particularly well. And then you'll say the same thing. If we get back up to 119.80 again, after having been down here 4 times, it's more likely that we'll move right back up to 120.50. And we're about an hour and a half away, I guess, from the Fed saying anything, so there's plenty of time for something to happen before then. Usually there's an argument that the market will try not to make a huge move before the Fed gets involved. But right now, as we're watching the market, it's leaking towards the lows, and we'll see how that's affecting. That's not too good for my FCX position. I mean, I'm in from down here, but not particularly helpful. And what's my other position? Oracle. My Oracle long is actually still at the highs of the day. That's probably something I'll hold overnight, because the relative strength it's showing to the market right now leads me to believe that it's going to higher prices. FCX was a reversal play of an oversold stock, whereas Oracle is breaking out on fresh news. And actually, it does have to, for me to actually take it out overnight, it probably is going to have to close above $31. If the market gets whacked to 117.50, that's probably only a 10% chance of happening. If the market stabilizes and closes in the 120 area, it probably closes above 31. And I'll take it out and see if I can catch a move up to around 32.50, 32.60, something like that. Okay, so there was a question about my FCX trade. Was FCX an SMB radar setup or just a consolidation play? It was actually not a radar setup. FCX had broken down. I was looking at it about 3 days ago for a move below this 40.50, and that had happened. And I have a rule that when I look for a stock for a breakdown on that third day, if it's getting crushed, I look for a possible reversal. So I started watching it around right here at around 36, 37, and there was unusual buying going on. It was consolidating at the low, and on the tape there was huge buying, 37, 38 cents a share. Now the buyer lost, I hit out of the position, but I made a mental note, if it gets back above 37 cents, which it did, and I nibbled here a little bit and got more long above 50, that it was a very good potential reversal candidate. In fact, I think if the market were to cooperate a little bit more, I would get my sales up here at 38 to 38 and a quarter. I did take sales in front of $37 here, covered my risk. But this was just really an oversold technical play. Generally what happens is around 10:30, that's when I start to go to the radar, start scrolling down the strong and the weak and looking for good setups. Most of the time I'm off of the desk by 11 o'clock at the latest, working on firm business, and so I miss a lot of those. Like the biggest price spike trade today was HPQ, where people started looking at it at, I think it was around $23, and I thought well, there were two really good trades in it today. After the initial spike, it came back down, set up its, a little bit of a, I guess you could call this a pennant here, and the first buy was the trigger buy was this break above 23.40, and then the next buy was this pullback into the 24 support area, and both of them worked really well. When you have two technical trades that work that well in a stock, it actually bodes well for price action over the next couple of days. When stocks don't trade cleanly initially, a lot of times these initial moves get erased. But if people are really going to it on all the pullbacks, we might be looking at least at a third wave today. Maybe tomorrow it pulls back to 24, 24.20, something like that. But maybe we're looking at $26 over the next couple of days, and that's a real-time real-time type of trade. I'm going to wrap this up, and one of the things that we're going to do going forward is we're going to try to do some of these real-time videos. G-Man's going to start doing like 2-3 minute videos when he sees a trading setup in the pre-market or on the open before he's trading, and we're going to shoot those out. They'll probably show up on the blog or on this page, and so you'll get some of our ideas, quick video explanations, price action, where we're thinking about getting in, risk reward, etc., and to really just keep on feeding the information to the trading community. Thanks for joining us again today, and this will appear in the StockTwits archives as well if you want to review it later today.